What if I told you that the next bank robbery may happen without a gun, without entering a bank, and without touching cash? Today, billions of dollars move across the globe in seconds. Customers can open bank accounts from their phones. Artificial intelligence approves loans, detects fraud, and monitors suspicious transactions. At the same time, cybercriminals are becoming more sophisticated, regulators are tightening controls, and central banks are exploring digital currencies. Welcome to the future of banking. In this video, we'll explore how fintech companies, neobanks, and central banks are transforming financial services and the major challenges they face. For decades, banking looked largely the same. Customers visited branches, filled out paperwork, waited days for approvals, transferred money through multiple intermediaries. Today, a customer can open an account with a neobank in minutes. Companies such as Revolut, Wise, and N26 have challenged traditional banking by providing digital-first services. But behind this convenience lies an extremely complex technology ecosystem. A modern fintech platform typically includes digital onboarding and identity verification, AML monitoring, fraud detection, payment processing, API integrations, cloud infrastructure, and artificial intelligence. Every transaction must be fast, secure, compliant, and auditable. Let's imagine a real-life scenario. A customer opens an account online. The entire process takes less than 5 minutes. But what happens behind the scenes? First, the fintech platform performs KYC, Know Your Customer. The system checks identification, facial recognition, liveness detection, address verification, and sanctions screening. Now, imagine a criminal attempts to open an account using a fake identity generated by artificial intelligence. The challenge becomes much harder. Modern AML systems use machine learning models that continuously monitor transaction patterns. Geographic behavior, device fingerprints, and customer risk profiles are analyzed instantly. Suppose a new account receives $20,000 and immediately transfers funds through multiple countries. The system may automatically flag the transaction as suspicious. The balance fintech firms must achieve is difficult. Too much monitoring creates customer frustration. Too little monitoring creates regulatory risk. Cybersecurity is no longer an IT problem. It is a business survival problem. Consider this scenario. A customer receives a phone call. The voice sounds exactly like their spouse. The caller urgently requests a money transfer. But the voice is generated by artificial intelligence. This is no longer science fiction. Financial institutions are already preparing for AI-powered fraud. To defend themselves, banks deploy multi-factor authentication and behavioral analytics, device fingerprinting, biometric verification, and real-time fraud monitoring. Security teams monitor millions of events every day. The goal is simple: detect threats before customers notice them. Because in today's digital world, trust is the most valuable asset a bank possesses. Historically, banks had time to stop fraudulent transactions. Payments could take hours or even days. Today, real-time payment networks move money almost instantly. This creates incredible opportunities for consumers and businesses. However, there is a downside. When money moves instantly, fraud moves instantly too. Imagine a fraudster convincing someone to transfer $10,000. Those funds may disappear within seconds. How can banks provide instant payments while maintaining strong fraud controls? This is a critical question facing the global industry. Perhaps the biggest transformation involves digital currency. Today, we have traditional electronic bank deposits, cryptocurrencies, and CBDCs. Suppose a worker in Canada sends money to family overseas. Digital currencies promise faster settlement and lower costs, but they also introduce new risks. Who controls the system? How is privacy protected? Can governments track every transaction? Artificial intelligence may become the most influential technology. It's used for credit risk, customer service, and cybersecurity analysis. Imagine reviewing 1 million transactions per day. A human team cannot do this effectively, an AI system can. However, AI introduces another challenge. Was the decision fair? Did bias influence the outcome? The future of banking is shaped by fintech innovation, cybersecurity, artificial intelligence, and digital currency. The winners will balance innovation with regulation, speed with security, convenience with trust. The future of money is already being built. Subscribe to the channel and let us know your thoughts in the comments. Thank you for watching.